Bitcoin plummeted by 15% below $50,000, while Ethereum, the second largest crypto, cracked 19% to trade near $2,361. Well, recent soft economic data has heightened fears, causing investors to pull back from riskier assets like cryptocurrencies, triggered by a broader sell-off in the Japanese stock market, concerns in the US markets, and geopolitical tensions. Escalations in the Middle East are further heightening investor anxiety.
At the outset, we have to look at this in light of the fact that BTC was at an all-time high of 73,000 USD in March. Whenever any asset or actionable claim is at its all-time high, that signals to many investors in the market that it's a great time to exit. As it appears that many investors who were perhaps in a long position and had been holding it for a few years considered this as a great time for them to realize their gains and have sort of exited the market en masse. Interestingly, another category of individuals who are holding BTC, who are interested in maximizing the value of the BTC they hold, are those people responsible for the Mt. Gox distributions, who also saw this as a great opportunity to maximize the value that can be given to those people whose BTC was stolen away back in the day. So as a result, both of these sales momentums have coincided, resulting in a drop in the overall Bitcoin price. In addition to these two reasons, there's also the recession fears given the geopolitical tensions right now. There is also a lot of stock market instability. This instability is stemming from also the impending elections in the United States of America, the economy of which greatly impacts the cryptocurrency economy as well. Earlier, there were rumblings that Donald Trump would become president, who was a vocal supporter of the cryptocurrency industry. However, now it doesn't seem like a likely outcome, and perhaps it's because of the fact that Trump is no longer a sure shot. The market is preparing for a Trump loss.
Well, more than $644 million in leveraged longs have been wiped out, with Ether traders particularly hard hit, seeing $256 million in ETH longs liquidated, while $231 million in Bitcoin longs were also closed, according to CoinMarketCap.
Anybody who is tracking the markets today is probably seeing a sea of red. And the reason is twofold, in my opinion. Number one, there are some legitimate concerns about the United States going into a recession. The numbers coming out of the States are not good, and that has led to a worldwide drawdown. So whether you look at Japan, Taiwan, India, Europe, or America, you see that all markets have not collapsed, but definitely drawing down substantially, severely. Maybe a buying opportunity. The second point is that the news from the Middle East is not positive. So that is also adding to these fears. And together they've caused, let's say, some panic in the market, which is reflected in the Goldman Sachs Panic Index. And this index, the Goldman Sachs Panic Index, is at a 2-year high. So that is obviously reflective of the fact that people are in a worried state of mind. And this has impacted the crypto markets as well. We are not immune, we exist in the larger ecosystem, so we are seeing the same drawdown that's happening. And that's led to a lot of large liquidations that are taking place in the space, and which is why we are seeing heightened falls in the crypto market. And anybody who's been in this market long enough knows that when the global markets crash, the crypto market also tends to crash along with it. Sometimes the crashes in the altcoins and others are very pronounced, but this is an early phase in the new market dynamics that are coming about.
So the market is also under pressure from the potential sale of Bitcoin seized by governments and the risk of a supply overhang from tokens returned to creditors through bankruptcy proceedings. So Justin D. Anitin, head of Asia Pacific Business Development at market maker KeyRock, noted that the crypto rout appeared to be somewhat Ether-led, highlighting social media rumors of institutional selling of Ether-related assets. Well, the Nikkei 225 index dropped 12% during early trading hours, and Japanese bank stocks experienced their worst performance since the 1987 Black Monday. So this decline was exacerbated by the Japanese central bank's decision to raise interest rates. Market participants believe that digital assets are victims in part of the unwinding yen carry trade as speculators adjust to higher interest rates in Japan. A Bloomberg report suggests that investors are also grappling with a drastic increase in hedging costs based on the volatility in the US dollar-Japanese yen trading pair.
So there's been a global market crash, crypto market crash, and this is due to various reasons, and one of the major reasons being G7 basically tipping off that there's going to be an attack from Iran, and there's going to be escalations in war-like situations between Iran and Israel. That's the very first reason. The second reason being the Japanese market crashing. They haven't seen 8% drop since their last Black Monday, which is a huge drop. And this has created quite a lot of inflationary and recessionary kind of situations. And I think this may continue for a while. But it should not be a bad news for Bitcoin holders, because Bitcoin holders, and I would definitely recommend people to actually start purchasing or buying the dip, because this is the right time when you exactly make sure that your Bitcoins are performing great. Having said that, this time we have seen how the Bitcoin market prices are very similar to the real market prices or the actual market prices. And this actually hints us at one thing, that the retail investments are lesser and the institutional investments are basically taking a center stage. So let's see what happens in the future. But for now, I think these are the reasons that are, basically making sure that Bitcoin prices have gone down.
Several analysts attribute the fall to broader economic concerns, including weak jobs data in the US, slow growth among major tech companies, and fears of a potential US recession as the national debt has reached $35 trillion. Additionally, significant movements of large crypto holdings have contributed to market instability. Jump Crypto, a prominent trading firm, moved hundreds of millions in cryptocurrencies, including a $46 million transfer of Ethereum, leading to speculation about potential liquidation of its holdings. While highly leveraged sectors are extremely risk-sensitive, investors borrow money to buy assets, and if prices fall, they are forced to sell to cover their positions. This forced sale triggers further declines in risk assets. So that's all for now. Keep watching 3.TV for more such updates, and do log on to our website www.3wordstv.io or scan the QR code. This is me, Vishakha Thakur, signing off.